Hey guys, how's it going? Value Venture Investing here today. So, the day that I've been waiting for and I've been a little bit concerned with because of the run that Apple has had. Apple had its Q1 2020 earnings. So, taking a look at the stock right now, initially after earnings, this thing was up like a ton, almost at 330. Now it's around 321, 322 as of recording this. Like I said, I was very trepidatious going into this because the expectations were so high. But again, Apple, I think, blew it out of the water. One part of their earnings wasn't the best, but I'm going to give you some thoughts on that and give you something that I think is a bit funny. So I'm going to go over the basic most important points that they reported. I don't have everything up here, but then after I go through this, I'm going to show you guys their interim financial statements. As of recording this, the conference call hasn't occurred yet. I don't think I'm going to get much other information in there that's going to be too relevant right now. If there is, follow me on Twitter and I'll post it on there if it's anything really important. So the big thing was, of course, revenue. They were looking at EPS, and I added cash because I found that interesting as well. Now, revenue was estimated at $88.5 billion, and we saw Apple just crush that at $91.8 billion. So this was the estimate. This was up 9% year over year, and that's kind of growth that we've been looking at because there's so much concern about revenue deceleration, iPhone deceleration on a year over year basis. Great to see that up 9% year over year. Of course, we know EPS, earnings per share, is going to be strong because they're buying back so many shares, but also their earnings were decent as well. But still, the estimate was only $4.55 per share, and we saw almost $5, $4.99. So that was really nice. Cash, Apple's got so much cash. They've implemented in their capital return program, which is burning through a ton of cash. However, their cash balances are growing again, $207 billion in cash. And just to remind you guys, that's not just cash, that's marketable securities, short-term and long-term. So if you're looking through their financial statements and you're a little confused about that, that's where that number comes from. But $207 billion, so still, a ton of cash. Now, if we're going into the individual components of revenue, it's kind of funny looking at this. We were so concerned about iPhone. What was that? Like the first quarter of last year? The estimate was $51.62 billion in revenue for the iPhone because we don't get unit shipments anymore. But they actually delivered $55.96 billion. So they end up crushing that, and that's always been a concern. The main thing one of the main drivers of that was the iPhone 11, which I figured it would be. Tim Cook said it was a good price point and the features that consumers are looking for, so that was a really hot seller. Going into 5G, I think we're going to still see these numbers grow. Services was the one sore point. We saw an estimate about 13.07, so around $13 billion. And we actually saw around 10 billion. So all the bears are getting on about this, saying basically, well, we're being valued as a service company. And, I have been saying that before, but it's kind of funny to watch some of these bears kind of swing back and forth, because before it was all doom and gloom because of the iPhone dropping, right? Now we're seeing the iPhone come up in terms of revenue. Gross margins, I think, are keeping around the same. And we're seeing services drop, and now they're not happy with that. So it's all on how you look at it. Is Apple getting rewarded with a higher multiple just because of services or just because of iPhone? I don't think it's getting a higher multiple just because of services. I definitely think that's a huge part of it, and I've described that to you guys. But it's a mixture of both. I mean, it's not just one or the other. And if you look at the big picture of services, what are we trying to look at? We're looking at long-term investing here. It's still up 17% year over year. So even though it didn't meet, the consensus estimate, it was still up 17% year over year. And Apple is not standing still, just like I said about their iPhones. They're not standing still. So that's still a phenomenal number. Now, which is comprised of AirPods, Beats, Apple Watch, things like that, the estimate was $9.52 billion, and we saw a little over $10 billion. So again, year over year, that's up 37%. Phenomenal growth. So if there was any concern with that, I mean, some people are still expressing some concern because it wasn't that, huge of a beat. I don't really fully understand that right now, but we'll look more into that. And Tim Cook actually mentioned that the AirPods, Beats, and the Apple Watch alone are the size of a Fortune 150 company. So just think of that. Like, if you had this as a business, as a a separate business, like you look at a company like GoPro or what Fitbit or something like that, what kind of multiples do you think that would have? And this is the size of a Fortune 150 company. So just to give you some perspective, gross margin was estimated about 38.1%. And of course, we saw 38.4, so a beat there as well. So generally speaking, I think it was a phenomenal quarter. This was a sore spot. We'll see exactly what they say on the conference call about that, but it's still phenomenal, and year-over-year growth is still through the roof. And we haven't even seen what Apple TV, Plus has to offer on a long-term basis, right? They're just getting started with that, as I've described on my other videos. So in terms of guidance, the estimate was around $62.5 billion for next quarter. Tim Cook's saying 63 to 67. Now that's a wide margin, and he's giving that reason because there's a lot of uncertainty in regards to the coronavirus. So really nice to see him give that uncertainty notice, because we don't know what this is going to turn into. I mean, I think most people agree it's probably over long periods of time, it's not going to make much difference, but it might negatively affect next quarter. So if this coronavirus doesn't turn out to be much, you can see this on the higher end, which would be a huge beat. So maybe that's one way to think about it as well. The gross margins are estimated to be about 38.2%, and he's saying 38 to 39%, so beating it there as well. So phenomenal numbers as far as I'm concerned. I'd love to know your guys' thoughts on this. But right now we'll take a quick look at their financials to give you a little bit more in-depth view of what we just talked about here. So taking a look at their financial statements that they've provided. So we're looking at 3 months ended, of course, and this is year over year. This was from 2018 to 2019. So net sales here, again, we have the products at 79 billion versus 73. Services were, again, like I said, beating significantly year over year. Look at that. That's 12.7 billion versus last year, 10.8 billion. So of course that gave us our total revenue number of 91.8 billion rather, and that's versus 84.3 billion last year. So we're seeing phenomenal growth, like I said. We won't go into the cost of sales too much here. Looking at their operating expenses, I always like to see them keeping that research and development high. Again, it's going to be an increase quarter over quarter, so that to me is hopefully not waste, and just an indication of the innovation of the company. So we've seen those expenses rise to 9.6 billion as expected. Net income was 22.2 billion year over year. Last year it was 19.6. So that gave us a diluted EPS, like I said earlier, of $4.99 versus $4.18. And if you look down below here, you can see the shares that they bought back. The shares that are used in computing earnings per share obviously have dropped because of their buying back. Net sales by reportable segment. This is a great area to look at. I look at this one all the time, and they're up in every single geographic segment except for Japan. We've seen the weakness in there for quite some time, but Americas is really just blown out of the water year over year. Europe's been pretty phenomenal, pretty flat in Greater China, but still up. And the rest of the Asia Pacific was a significant beat as well. So then you have your total net sales of 91.8 at the billion dollars at the bottom there. Net sales by category, like I said, the iPhone was 55.9 billion, and that was a huge beat year over year. Mac, we've actually seen drop. I mean, we saw Mac increasing for quite some time. And I kind of feel like when you look at their product mix, a lot of people are waiting for the iMac upgrade. Could be wrong, but they've just been upgrading. I think we saw a lot of the upgrading in last quarter, although they did increase their or upgrade the MacBook Pro 16-inch here recently. So not too sure how much of that we're seeing. iPad, this is another area here that has actually dropped a bit. And again, it went from 6.7 billion last year to 5.9. That's pretty significant. But in my opinion, I think it's got something to do with the iPads that they have out right now. Like I've said to you guys in the past, it's just phenomenally powerful, the iPads they have right now. There's no real reason to get any new iPads. I mean, you got one of these new ones. It's like, what else do you need? There hasn't been an upgrade in a while. So if we see an increase or an upgrade in the iPad this year, which I think we will, we're going to probably see that accelerate again, but I'm not too sure what they're going to do with that. Wearables, home, and accessories, like I said, doing a massive $10 billion, a little over $10 billion this quarter, and year over year, that's 7.3 billion. So phenomenal growth on there. And again, services here was at 12.7 billion. People were a little upset that they missed, but look at that year over year growth up, almost $2-3 billion year over year. That's phenomenal. I don't see anything wrong with that. And again, at the bottom there, total net sales of $91.8 billion. So those are the numbers, guys. I think they're pretty phenomenal. I think that this is being a little bit overblown. I'm actually regretting selling my Apple a little while back. I made a video on why I sold it. Of course, always good to take a profit and lower my percentage of my portfolio in Apple. But I was a little bit scared going into this quarter that it wasn't going to be as great as the market expected. And it's generally speaking beat it on every account. So be very interesting to see what happens tomorrow. It spiked so hard right after the earnings, and then it fell back. So I don't know if we're going to hit 330 tomorrow. That'd be phenomenal. More than anything, I'd like to know what you guys think. Specifically, what's your thoughts on the shift between iPhone actually showing some growth and services falling back relative to expectations? Do you think similar along the lines to me, or do you think that now it deserves a lower multiple because it's becoming more of an iPhone company? Curious what you think on that. Curious what you think on the earnings as a whole. Don't forget to subscribe, guys. Really helps the channel out. And that's going to be it for tonight, guys. And I'll see you in the next one.